Hey guys, welcome back. I hope you had a really great day trading yesterday. So yesterday was Monday, January 6th, and I'm getting a little bit of a late start on this video. I fell asleep last night after dinner, never set my alarm to wake back up and make the video. So here we are, 6:30 a.m. on Tuesday, and I'm gonna go through this pretty quickly so this video can make it to you before market opens. Yesterday we had some pretty awesome moves. SPY opened with a gap up to the very top of the implied move, so 596, and then from there we pushed up to the 1 hour 200 moving average, and then from there we swung back into the implied move to close underneath this 30-minute 200 moving average. So this 30-minute 200 moving average did have a downward momentum, so even though we got above it at open, we pushed up to the next level, but this pulled us back down. So we did close within the implied move. In the previous day's video, I did suggest 597 as a strike to possibly sell. That is what I did. So 597, 598 bear call spreads, and that had some amazing premium up here. All three of these strikes would have been really great strikes to sell, and there was a ton of premium to collect up here before we swung back in. So after we dropped back in, we did bounce on the 50-day moving average. You could see this wick right here takes it all the way to this down gap and 50-day moving average, and that is where we swung back up to close just short of the 30-minute 200 moving average. So some nice volatility, some great moves in SPY. SPX, same thing over here. We gapped up and over the 50-day moving average, this down gap, the 30-minute 200 moving average, and we took it all the way to the top of the implied move. The 30-minute 200 moving average was pointing down. We still pushed up, got above the 1 hour 200 moving average, but we did find our way back. And in SPX, we actually bounced on the 30-minute 200 moving average. So SPX, SPY, a little bit disconnected. A lot of the time they run almost perfectly together. Right now they are a little bit off, but we still did close SPX within the implied move, but here we did close above that 30-minute 200 moving average. In SPY, it was underneath it. And in SPY, we bounced right on the 50-day moving average. Here in SPX, we bounced on the 35 EMA and within this down gap. So big thing is that we still closed within the implied move in both. SPY closed up yesterday 0.58%. SPX up 0.55%. We are on to next day's VIX already, so I don't know where yesterday's closed, and we did close within the implied move in both. And QQQ opened yesterday with a pretty big gap up to the top of the implied move, and that also took us above the 1 hour 200 moving average, above this down gap from the start of the week. Really, this was the start of last week, so the very last week of 24, that was our down gap. We got above that and also above the 30-minute 200 moving average. So we did take it to the top of the implied move, which oftentimes will squeeze us higher, and here it did, but we did end up pulling back down, and we did close right between 524 and 525. So if you did sell 524, 525, bear call spreads right here, this would have been a green trade, especially if you collected that higher premium that you would find up here on this spread. So QQQ yesterday did close up 1.15%. VXN here is already for today, so I don't know where that closed yesterday. And we closed within the implied move for the next day. So 424, we closed a little bit above that, but we did close within 525. I think I said 424. 524, we got a little bit above that, 525. We closed right in between the two. And IWM, we did open here with a big gap up underneath the 30-minute 200 moving average, and look at that momentum there. It is pretty strongwardly facing down. I don't think that's a word, but it is today. We did get above that to the top of the implied move, 227, 228 bear call spreads would have paid 100% if you took that trade. From there, we dropped all the way back down, filled this morning gap, and closed right at the 35 EMA. So beautiful swing in IWM. That momentum right there just pushed us right back down. And IWM closed flat, up 0.04%. And we did close within the implied move, right in the middle of the trading range. And lastly, DIA. We did open DIA with a gap up. We took it right up to this down gap to close that out. Then from there, we took it to the 30-minute 200 moving average. Again, that momentum was strong, facing down, and it popped us right back down. We closed this gap, closed just underneath the 35 EMA. So we did make a higher high here, but we did see resistance at that 30-minute 200 moving average. DIA closed flat, and we did also stay within the implied move here. So that was a quick overview of today. It is just a little after 6:30 a.m., so I'm going to be really fast to get today's trading ranges up and this video up before market opens. This is one of those days where it's a really good idea to have notifications on when I do post the video at a slightly different time. So let's head right into it and check out tomorrow's levels. Alright guys, so if you want to help support my channel, please make sure to like, share, and subscribe, and let's get right into it today. The implied move in SPY is between 591 and 600, and that is from options. The 30-day average volatility and the next day's implied move on Wednesday is between 590 and 601. And don't forget that Wednesday we do have the Fed minutes. And to the upside, the first level to look for is going to be that 30-minute 200 moving average. We do still have a pretty strong downward momentum here that did pull us back down yesterday. And if we do get above that, the next level is going to be 600, which is the top of the implied move. That is about where we saw resistance yesterday, and that is right at the 1 hour 200 moving average. 601 is the top of the implied move on Tuesday's contract, and then underneath us we have quite a bit of support. We have the 50-day moving average, this down gap, this up gap, so we have an island gap surrounding that 50-day moving average. Underneath that, 591 and 590. This does look like an attractive spread because I do think these levels will hold it up, at least heading into Fed minutes tomorrow. And SPX, the implied move over here for today is between 59.35 and 60.15, and the 30-day average volatility and Wednesday's implied move is 59.20 to 60.30, and to the upside we have that 1 hour 200 moving average. It is a little bit lower here in SPX than SPY, and then 60.15 is the top of the implied move on the day, and 60.30 is the top of the implied move on Wednesday's contract. If you're looking for a good strike to sell bear call spreads up here, I'd probably be looking to 60.20 or even wrap around the strike for Tuesday, so that would be 60.25 to 60.35. So that is the upside, and then underneath us we do have the 30-minute 200 moving average, this down gap, this up gap, 35 EMA, and 50-day moving average. So a whole lot of support to the downside. I do think we're probably going to stay above that heading into the Fed minutes, and 59.35, 59.20, those are the implied moves for today and tomorrow. So if we do get down into this level right here, then that would be a really attractive bear call spread, and I would probably look to 59.30, 59.20, or maybe even 59.15, 59.25. All right, and QQQ, the implied move over here is between 520 and 530, and that is from options. 30-day average volatility and Wednesday's implied move. They've been matching up lately, 518 to 531. And to the upside, we do have resistance right here around 528, just a little bit short of that. And then the top of the implied move is 530 and 531 on Wednesday's contract. We do also have a down gap right here that I'm just seeing and I did not have in place. So right here, we do have a red gap, and that could be a place where we see selling pressure. All right, so the top of that gap lines right up with 530. And when gaps fill, bear gaps fill, the top of the gaps tend to be resistance. So 530 should be considered resistance. And then underneath us, we do have a fair amount of support. We have 30-minute 200 moving average right here, which you can see we did dip under yesterday and then swung back up into close. We do have an island gap, this down gap, this up gap, the 35 EMA, the 1 hour 200 moving average. That right there is a ton of support. 520 to 518. 520 is the bottom of the implied move for today, 518 for tomorrow. And if we do drop down to the bottom of the implied move into this area right here, I would look at maybe 519, 518 bull put spreads. All right, in IWM, the implied move over here is between 222 and 227, and that is from options. 30-day average volatility is quite a bit wider, and it is between 220 and 230 and 221 and 228 on Wednesday's contract. To the upside, we do have the 30-minute 200 moving average, and that momentum is still pretty strong facing down. If we do get above that, resistance is right here at 227, just underneath the top of the implied move. So 227, top of the implied move, 228 on Wednesday's contract. Because of how wide the 30-day average volatility is here, you might look to 229 as a possible strike if you're selling spreads. If you're buying premium, I don't know if I'd go quite that high. And then underneath us, 35 EMA. We did come down yesterday above the 30-minute 200 moving average and then down to the 35 EMA. So definitely keep an eye on this to see if that holds as support. If we break, the next level is 222 and 221 on Wednesday's contract. We do have this up gap from last Friday as well, just underneath the next 2 days trading ranges. And lastly, DIA, we do have an implied move of 421 to 433 that has not changed. It just came down a little bit because of theta decay, and to the upside we do have 35 EMA. That is definitely the first level to look for. We have been seeing that as a resistance most of last week except for Friday. Yesterday we did close underneath it, and we do have a red signal line here. So the 35 EMA, if we get above that, 30-minute 200 moving average still pointing down quite strongly. This gap was closed out, and we do have a support gap from last Friday right here at 424. So there you have it, guys. Let's have some fun today. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tonight.